Good morning, everyone. Welcome to Windsor Brokers Live Daily Market Outlook for Monday, 22nd of April 2013. The main characteristic of the previous week and the beginning of the new week is strength of the US dollar, as most of investors moved from the other currencies, and basically after shorting the indices moved to the US dollar. That resulted in the strong pressure of the dollar's major counterparts as euro hit fresh lows of the week just ahead of 130. Support sterling also was lower, while dollar yen again flirting with the psychological and strong 100 yen barrier. Dollar Swiss remains on the upside, testing the recent highs at 92.2040 zone, while Aussie dollar after posting a marginally fresh low at 102.65 remains under pressure. Commodities appreciated as yellow metal closed the week just above psychological and previous resistance 1400 level, and advancing again during the Asian session, hitting last week's fresh high at 1424. That signals fresh recovery and fresh extension higher as a correction of the past week's strong fall that commenced from 1590 and ended up so far at 1321. With the crude oil being under pressure, some recovery was seen after hitting a fresh low on last Thursday at 85.62. Bounce up to 88.70 was seen so far, with the overall picture still being quite bearish. And the current movements within 85, 80 and the 89 zone, seen as the consolidation of the recent two-legged descent from the peak of 97.68 posted on 1st of April. Poor calendar today, just a few events, so not much to be seen today. We have the consumer confidence and existing home from Eurozone and existing home sales from United States due at 1400 GMT. More or less forecasts are unchanged. The minus 24 is the consumer's confidence forecast compared to minus 24 in the previous release, while existing home sales are forecasted to tick higher to 5.02 million compared to the previous release of 4.98 million units. Not to waste our time, we're going to move to the technicals and see the latest movements in the markets and the expectations for today for the major currencies and commodities. We start with the single currency against the US dollar. As always, as we can see on the hourly chart, the euro steadies somewhere around 130.70 following last Friday's spike to 131.27 that failed to sustain gains above psychological 131 barrier, and the fresh dip lower ended the week at 130.46. Asian opening started with 30 pips gap higher, opening at 130.75, and this was basically all seen during the session. As we can see on the 30-minute chart, the pair remains entrenched within 130.50 approximately and 130.83, quite a narrow range, with the directionless trading seen during the Asian at the beginning of European session, with the hourly studies, hourly indicators holding the neutral tone for now. 4-hour indicators from the other side are still slightly negatively aligned, as basically the pair fails to sustain gains above 20 days moving average, and from the other side 55 days one is holding the downside, so far protected, keeping the price moving within the narrow range. As said, negatively aligned indicators see immediate threat of possible retest of recent low and range floor at 130.00. Also psychological support posted on 17th of April 2013, a break of which would be a signal for a deeper reversal, deeper correction of the upleg from 127.44.50 double bottom posted on 27th March and 4th of April. That peaked so far at 132.00, where again double top was left, a bearish pattern that triggered the sharp fall so far to 130.00, where the 30 days Bollinger Band held the downside so far. However, as I said, as long as 131 barrier stays intact and there is no clear break above here and another significant last Friday's high at 131.27, more focus will be still seen on the downside as loss of immediate support at 130.45. This is the low of last Friday and the low of Thursday, where sort of base has been established, will trigger immediate pullback down towards 130.25 and finally test of 130.00 as a key near-term support, loss of which to open next another significant support 129.72. that marks 50% retracement of the entire 127.44 132.00 rally, and this will bring bears fully in play for a stronger reversal. On the larger picture, we have formation of the diamond pattern as shown on the daily chart. You will see how it looks now, and generally this is the bearish pattern, and likely is going to signal reversal at this point. Let me just finish it so you can see how it looks. It's a proper textbook diamond pattern with the price attempting now below the support line that currently stands at approximately 130.50, with the break below 130.00 required to confirm completion of the pattern and open way for a stronger reversal. As said, slightly positively aligned, the daily structure is still seeing potential towards the upside, but completion of the diamond pattern in the negative way, meaning the breaking below the support line and immediately exposing 130.00 would have more negative impact to the pair's price action. Conversely, break above 131.27 would keep the slight bulls still in play. However, break above 132, which is the recent double top posted on the 16th and 17th of April, is required to signal a resumption of the recovery rally from 127.44. That will face immediate resistance at 132.27. That marks 50% retracement of the down leg from 137.10 to 127.44. British pound also remains under heavy pressure against the US dollar following a upside failure last Friday at 153.67. That, along with the 153.78 peak of 16th of April, now forms the double top pattern with the sharp slide seen on the last Friday's announcement of Fitch Fitch downgrading the UK credit rating, taking them out from AAA club to AA plus, resulted in immediate sharp fall as the pair hit fresh low and closed around the 152.20 zone on Friday, with overnight fresh weakness extending as low as 152.02, testing basically the support that has already been cracked, 152.15 previous double bottom. That now opens way for a further weakness of pair that commenced from the recent peak at 154.10 posted on the 11th of April 2013, and succession of a series of lower tops define the downtrend. Now brief break and the denting of 152.15 still holds above 152.00 as psychological support, but more focus is still seen towards the downside. 4-hour indicators hold a firm negative tone, while the hourlies are in the negative territory, started to point higher on a corrective, I would say rather consolidative action ahead of psychological 152 support, and the more significant is the 151.75 that marks a 61.8% Fibonacci retracement of the recovery rally from 150.32 to 154.10. Also, this marks the daily Ichimoku cloud base at 151.75 that reinforces this support, and the break here as the 50% retracement at 152.21 has already been cracked. More focus again is seen towards the downside. The double bearish crossover of 10 and 20 below 55 days exponential moving averages keeps the downside pressure. Then any bounce higher will face good resistance at 152.70 approximately zone, while the break above 153.00 would provide immediate immediate relief. However, break above double top at 153.67 78 is required to shift focus again higher, and for test of key near-term barrier at 154.10, peak of 11th of April 2013. A larger picture for cable is still holding a slightly positive tone as a part of recovery rally from a 148.30 low of 12th of March 2013, with the approximately 38.2% of entire 163.80 to 148.30 descent being retraced so far. The price stalled just ahead of 154.22, that marks 38.2%. With the current pullback still seen as corrective, as long as the trend line support, bull trend line correcting 148.30 and 150.32. Currently standing at 151.64 holds. This reinforces the previously mentioned support at 151.75. So basically, a break below 151.75, 65 would be signal for a stronger reversal, and that would look for test of psychological 151.00, and then higher low of 4th of April at 150.32. Conversely, any break higher, as I said, requires break above initially 152.70, then 153.00, 153.67, 78 in order to turn the focus towards the upper targets, and break of 154.10 to possibly resume the larger recovery rally and uptrend from that commenced from 148.30. Pardon. Dollar yen is back to strength again following corrective action on 11th of April 2013, upside rejection at 99.93 when the pair failed to test psychological resistance, and subsequent pullback dipped as low as 95.80 where the temporary support was found, and the stronger recovery followed. Positive tone has been established on the lower time frames, with the overnight's gap higher opening now flirting with the 100 barrier. This resistance proved to be tough already, as previous attempt here failed and triggered quite a significant pullback, and now the pair is again attempting their overbought conditions on the hourly chart. See possible hesitation, as we can see during the Asian session and the beginning of European. It's quite flat movements with the very narrow range. That my signal, as I said, hesitation ahead of 100 barrier. More room for upside seen on the 4-hour chart, with the indicators being well positioned as a break above this psychological resistance would open way for further extension of the larger uptrend, as daily studies are again well positioned and positively aligned for possible further extension higher. We'll be looking for a test of 101, and then comes 101.43. This is the April 2009 high at 101.43, as the pair already cleared 50% retracement of the larger descent from 124.14 peak of June 2007 down to 75.55 historical low of dollar yen posted in October 2011. I said a brief crack of 50% that stands at 99.84 hasn't been confirmed yet. We require confirmation on a break above psychological 100 resistance to resume the recovery. The larger picture indicators are well positioned and supportive for the current rally. Aussie dollar, as we said in the introduction, remains under pressure, as we can see on the ADX hourly chart. Bears are in play, with the marginally fresh low being posted overnight at 102.65, just against previous one at 102.67, keeping the downside the pressure. That's the price action after opening of Far East did not show much on the upside. 103.06 brief attempt through psychological resistance sees so far, with the 55 days exponential moving average keeping the upside for now limited. And negative tone dominates still on the lower time frames, as we can see on the hourly as well as 4-hour indicators, with the 4-hour ones starting to point slightly higher. This could be described as consolidative rather than corrective action, as we have a series of strong resistances to be cleared in order to signal some stronger recovery. Initial one is 103, that hasn't been clearly broken, and then 103.36 ahead of more significant last Friday's high at 103.57, and regain of this level is seen as the initial trigger for some more significant recovery, with the more significant 104.00 peak of 16th of April 2013, and near 38.2% Fibonacci retracement of the entire fall from 105.81 to 102.65, being seen as a breakpoint for some stronger and more significant recovery. And this also is required to confirm the near-term base. Currently attempting to create the pair is attempting to create a near-term base at 102.65. This is still in the rather theoretical way rather than the practical, as the price holds just above recent highs, and they quite negatively aligned. The technicals are still seeing a more focus toward the downside. A break below 102.65 is expected to open interim supports at 102.24, 76.4% retracement of the recovery rally from 101.14 to 105.81. Then we have psychological 102 support, also a low of 11th of March, en route towards our key level, and a larger range bottom at 101.14, low of 4th of March 2013. As said, negatively aligned the indicators on the lower time frames as well as larger ones, as daily indicators broke now into the negative territory, and price moved below 200 days moving average. That is reinforcing our 104 barrier, currently standing at 103.95. See again more potential towards the downside, unless we see the break above initial 103.50 and more significant 104.00 barrier. That would allow for some stronger recovery, and basically it will confirm the pair still holding within the previously established range that exists from August 2012, upside being limited at 106.20 and the downside at 101.14. And a final look to the commodities. As gold is in the recovery mode of recent low at 13.21, posted the last week. Steady recovery that was confirmed on a break above the recent tops of the range at 14.03. 1400 barrier basically acted as psychological resistance and kept during the past week gains limited. The final break seen last Friday extended to 14.24, followed by a corrective pullback down to 13.91. Weekly close above 1400 still keeps the focus on the upside, as the fresh strength during the Asian session now retested the 14.24 high, and now is looking for a test of 14.43 approximately. That marks 50% Fibonacci retracement of the descent from 15.90 to 13.91. This is also reinforced by descending 55 days exponential moving average of the 4-hour chart, and basically break above 14.50 will be a good signal that gold is in a good pattern for the stronger recovery of the recent heavy losses that dipped to 13.21. However, a fresh negative tone being established on the break below critical supports at 1520 and 1500 still persists, and the current bounce could be still seen as the corrective action preceding a fresh weakness, as most of analysts agree that recent break and the sharp fall is not just a sell-off that will be quickly recovered, but signals major change of the gold's trend and a major reversal of the over 10 years rally that commenced from levels of $250 approximately per ounce and peaked 2 years ago at $1,920, with the subsequent pullback being so far held by 1520. We have it 1520, 1500. That was the critical support. I'm trying to find this chart, unfortunately. There it is. So we have a break below this critical support that now signaling a possible complete reversal and change of the trend. As long as 1500, 1520 stay intact, we'll be talking about current bounce as a corrective action. Otherwise, a regain of these levels would bring again some more positive tone into the larger picture of the yellow metal. Indicators on the 4-hour chart are in strong ascending mode, and most of them already in the positive territory. That keeps the positive outlook for the near term, as well as hourlies that are now approaching overbought territory. And further hesitation ahead of a 50% retracement at 1442 is seen as a quite likely scenario, but overall tone remains positive and favors the further corrective action. And finally, from commodities, we're going to take a look at crude oil. Just to see, as shown on the daily, Ichimoku studies are firmly bearish. All parameters are fulfilled for the further extension. Lower the prices well below the clouds base that currently stands at 92.67. Below the Tenkan and Kijun Sen lines, and the Tenkan Sen is well below the Kijun Sen. That keeps the downside focused. Now back to the lower time frames. Consolidative action is seen off last Thursday's low at 85.62 as repeated attempt higher did not succeed to clearly break previous low at 86.05. 85.62 seen so far, and the quick bounce higher to the range tops approximately at 89.00 has followed. Slightly positive tone is still seen, but on the hourlies, but current movements could be described as directionless, as we have the clearly established range, and while the price holds within the parameters of the range that mark on the downside 85.62 and the upside 89.00, keeping the sideways mode in play. On the 4-hour chart, ascending indicators see potential for some stronger recovery, though the 20 days exponential moving average limits the limited the overnight price action at approximately 88 level. We need to see the break above 89. That also marks 38.2% retracement of the fall from 94.78 to 85.62 in order to confirm the near-term base and allow for some stronger recovery, where we'll be looking for test of psychological 90.00 and 90.20, 50% retracement. Also, the first one is reinforced by descending 55 days exponential moving average. Basically, break above 90.20 is seen as a confirmation of some stronger recovery. On the daily, negative tone dominates and keeps the downside favorable. The current congestion seen just as a consolidation before the fresh extension lower, as the pair extended lower to as low as 85.62. Further extension lower will be looking for test of Fibonacci expansion of 138.2% at 84.65. We're talking about the third wave lower from 97.65 as a part of descent from 98.63. As we said, the third wave could extend as low as 84.65. That marks 138.2% Fibonacci expansion. As said, the negative tone that persists on the larger time frame still keeps the downside favored. This was all from me for today. I expect now your questions. If there is any, please you can type them and submit them right now. Anything that you wanted to hear and we didn't mention, any other instrument or whatever. Just to mention that the coming week has some significant releases. Tomorrow we have a series of manufacturing PMIs coming from Eurozone and the United States. GDPs from UK and United States seen on Thursday, and on Wednesday we have German IFO data due to be released on Wednesday morning, as well as Bank of Japan's interest rate policy decision seen on 26th of April on Friday. No questions for today? Okay, in that case, I would like to thank you all. I would like to mention that all the newcomers, you can see on the screen the email analysis@winsorbrokersltd.com. You can suggest, you can submit your comments, suggestions, anything that you would like to be improved or changed to this email, and we'll be glad to do the favors and provide something that you need and we don't have it in our offer currently. We're back tomorrow morning regularly at 7 o'clock GMT, 10 o'clock local Cyprus time. Until then, I wish you a nice beginning of the week, nice Monday, and of course good and profitable trading. Good luck.